This is Bloomberg Tech. Coming up, the biggest AI export restriction yet. Anthropic disables access to its most advanced models for all foreign nationals. The US concern jailbreaks in the code. Nvidia is seeking to raise at least $20 billion from its first corporate bond sale since 2021. We'll have the details. As SpaceX shares throttle up on day 2 of trading, adding to a blockbuster public markets debut on Friday. And this is what markets look like. Hello, welcome to Bloomberg Tech, Monday, June 15th. There is a big focus on what is happening between the US and Iran. Later in the show, we'll get to that. But SpaceX, in its second day of trading, up 8%. And it's putting a big spotlight on the AI trade, on AI infrastructure. The NASDAQ 100's off session highs, but we're again close to records. And the narrative is that there is feel good in this equity market. Let's get to our top story. A major escalation in Washington's approach to AI. The US government has ordered Anthropic to block foreign access to its most advanced models after officials flagged security vulnerabilities in its newly released Fable 5 system and Mythos 5.2. Talks are underway between Anthropic and the Trump administration. Joining us now, our AI editor, Bloomberg's Seth Fiegerman, and in DC, Bloomberg's Mike Shepard. And Shep, I want to start with you. This came from the Commerce Department. Explain the export restriction and what the government asked of Anthropic.
Well, Ed, this all dropped right as everyone was still so focused on the SpaceX IPO, 5:21 p.m. on a Friday, a directive to Anthropic saying, look, we are concerned about foreign nationals having access to 2 of your most advanced models, essentially the key products that the company would want to pitch as it's heading into this nearly $1 trillion IPO. And this really marked a huge shot across the bow once again for this AI developer from the Trump administration. And in essence, it forced the company's hand. Anthropic had to deny access worldwide to these 2 products, Fable 5 and Mythos 5, in response to the government's move. Right. Now, this, in a way, Ed, really marked not only an unprecedented step for any administration, it really marked a break from what the Trump administration had laid out just a little more than a week ago with that order, that executive order that President Donald Trump signed that was aimed at cybersecurity and AI, and that it included language that said this should not be interpreted as establishing a licensing regime. Yet, in effect, what we are seeing is that the government is blocking the release of these models over the kinds of safety concerns, in essence, the vetting that the government had wanted to see done on a voluntary basis, and yet it is setting its foot down now over security concerns and essentially holding off the release of these 2 products.
Seth, this was an action directed at the use of the models, Fable 5, Mythos 5, by foreign nationals. But Anthropic made the decision to close off access to everyone. What was the explanation that the AI lab gave?
Yeah, well, Ed, they're saying access to foreign nationals, not just in other countries, but those residing in the United States. And it seems that Anthropic made the decision that this was unworkable to allow this model to remain on the market with those restrictions. So they pulled it while they continue to talk with the government. Now, there's a certain irony here. 2 days before this move, Anthropic's Dario Amodei had come out and said, he thinks the government should have the ability to ban models that pose certain risks. 2 days later, the government took a step that has effectively caused a model or 2 models to be pulled from the market. Right. But in this case, Anthropic is saying it's essentially misguided, and the risks outlined may not be as severe as the government seems to think they are.
Seth, Anthropic's saying there's a misunderstanding here. The issue that the government laid out is something called a jailbreak in the code. It has to do with the guardrails that are placed on the models themselves. Could you explain to the Bloomberg Tech audience what the jailbreak concern is?
Important to note that at this point, we have not seen the research that Anthropic and former White House czar David Sachs have alluded to that implies that there is some kind of jailbreak vulnerability. What we understand is that it seems to be pretty narrow in nature and may actually be something that enables cyber defenders to use the technology to spot and protect against flaws. But what Anthropic is saying is there's not some universal jailbreak, some wider flaw that could be breached in a potentially damaging way. And it seems to believe that the government is either overstating or misunderstanding the nature of the risk here.
Mike, real quick, what's happening behind the scenes?
Well, that is what we're trying to find out next, of course. And we want to first know what remedial steps the company could take at the government's behest, what those might look like, how long that might take, and whether the company really would follow suit. We don't know how long this will unfold or if there will even be a legal challenge. And also, we have to look at the politics of this abroad. The president just arrived in Geneva for the summit in Evian with other G7 leaders. AI is on the agenda, and now it will be a more urgent issue, especially as we see economies, including the European Union, examining the question of tech sovereignty and the concern that they have about perhaps over-reliance on U.S. technology that may be at risk of being taken away from them at a moment's notice.
Bloomberg's Seth Fiegerman and Bloomberg's Mike Shepard in D.C. Thank you very much. The industry weighs in. For more on the impact across the AI ecosystem, we're joined by Joelle Pineau, Chief AI Officer at Cohere, a frontier AI firm focused on LLMs and AI applications for business customers. And Shep just set it out pretty clearly. At issue here is whether or not the government should be able to say you can or you cannot use a particular piece of technology because of the concern that was outlined. What is Cohere's position on that?
Indeed. And, Cohere is a company that's fully focused on developing models and agentic platform for enterprises and government. And so we've been talking to that segment of the market for a number of years now. What we've been hearing is that customers want the ability to really control their tech stack. They want to make sure that the technology runs in a predictable way, that it's stable, that it has high guarantees in terms of confidentiality and security. So there's a number of companies and governments already who are opting for on-premise installation where they can control the model and they can control all of the software stack. Clearly, the news from the last few days is a huge wake-up call for others across the industry. The fact that models, which a few days before were presented as some of the most capable in industry, suddenly are no longer accessible means that there can be a lot of volatility in terms of access to the technology, and that's got to be a big concern for companies.
Right. Joelle, this news hit 5:21 p.m. Eastern Time Friday, so I appreciate it's been just a couple of days over the weekend. But has Cohere had any inbound? Right? If there are entities that can't get access to Mythos and Fable 5, maybe they use you.
I would say huge number of inbounds. It's coming from business customers who are looking to diversify the set of technology that they can rely on, both for the core models, and we do build our own models, and for the orchestration and governance platform. A large number of inbounds from governments around the world, especially outside of US and China. Good governments are concerned about their own ability to access the technology, but also the economic trajectory of companies and citizens within their frontiers. And then, of course, a lot of inbound interest from investors who are wondering, what does that mean? We know there's, of course, the big IPOs coming, a lot of volatility from that point of view, and a lot of people who are just trying to understand the situation and see what have the news changed in terms of what should be their investment strategy.
I had asked Seth to explain the concept of a jailbreak in the code, right? That is the reported issue that the US government had with Mythos and Fable 5. Explain technically how that works and how you'd approach, I guess, explaining it if it was you that was dealing with the Commerce Department on a restriction like this.
Yeah. And so the concept of a jailbreak can be used pretty loosely, but quite specifically, there's a sense in which a particular system has some guardrails around the intended use of that system. And a jailbreak happens when someone manages to infiltrate the system in ways that weren't intended. So in this specific case, we can imagine, from Mythos to Fable, Anthropic has put in some guardrails that prevent the ability for the model to be used to create cybersecurity attacks. So we can presume that the specific jailbreak that was identified is the ability to go around these defenses and in fact make the model produce outputs that would leverage some of the cybersecurity capabilities of the model.
Something at the center of Anthropic's response is that many of their own staff wouldn't be able to access this technology based on the restriction, right? Because many of their staff are foreign nationals. It also highlights a world dependence right now on US technology. You're a Canadian company. I get that. But what's your thinking on that issue? The concentration of leadership in the field of a small group of US companies. Maybe you dispute that.
No, I don't fully dispute in the sense that, like, where we sit today, there's literally, 4 countries in the world that have the ability to train foundation model: US, China, France, Canada, right now. Even in those companies in the US, there's a large number of foreign nationals. The, inbound talent into the US has been formidable force for the progress of this technology. So this is going to be a big challenge. And the other thing that's worth mentioning is, in many ways, a lot of the developments in AI of the last few years, are at this level of ideas and concepts. Sure, we have the models, but really the recipe for training these models sits in the head of a relatively small number of people. But there is, a large enough amount of circulation between the various companies that we can assume the capabilities to do that exist, not just at Anthropic.
Joelle Pineau of Cohere, thank you very much for your time. What is our top story today? Now, coming up, Nvidia heads back to the bond market after a 5-year absence. Why is the AI giant looking to raise billions of dollars while it's sitting on a mountain of cash? That's what the stock picture looks like. Be right back. This is Bloomberg Tech. Today's big number, $20 billion. Nvidia is looking to raise at least that in its first bond sale since 2021, according to sources. 7 tranches, maturities from 2 to 30 years. The proceeds will be used for general corporate purposes, including refinancing existing debt, as Nvidia joins other AI leaders like Amazon and Alphabet in raising large amounts of capital to fund AI-related infrastructure. But why does a company so flush with cash need to borrow more? Bloomberg Intelligence reckons that it's to focus on funding partners. BI senior credit analyst Robert Schiffman joins us now. When you publish the React, that's the bit that jumped out of me off the page, right? Why would they do that? Well, they have a track record of investing in the kinds of startups that rely on their technology. Extrapolate on that thesis.
Yeah, well, listen, you can never be too rich. It's a good problem to have. Quite frankly, Nvidia does have a cash problem. They have too much of it. So people are scratching their heads this morning thinking, why are they raising more? Listen, you take money down when it's available. There is so much money chasing after this AI build out. They're going to put in the highest quality names that they can. And I think Nvidia is just taking opportunity here to basically borrow at effectively a 0 rate, at least from a WACC perspective, to give them more financial flexibility. I think they're likely to pour money probably back into strategic partners like OpenAI, like Anthropic. And who knows, maybe a SpaceX, which is likely to do their own bond deal, might come to Nvidia for some financing down the line as well.
There's like the smart cost of capital angle to this. The shareholder return story has changed recently with Nvidia. I'm a student of your work, right? It's not that unusual for companies flush with cash to just say, like, okay, this is an interesting thing for the finance org or the treasury team to do. Explain the kind of nitty gritty of that.
Well, listen, the weighted average cost of capital is what they're looking at. The weighted average cost of debt when you have a $5 trillion equity market cap is basically 0. So you could take money, borrow it from bondholders and use it for equity or equity-style investments at a little or no cost. I think you're going to see more of this. You saw a lot of this from Apple over the years.
That's the case study.
We're not used to it now, though, because most of these other companies have now turned free cash flow negative, and they need it for funding for their AI investments. That's not what Nvidia needs. Nvidia is probably going to generate a couple $100 billion of free cash flow over the next year. So they're swimming in the money. But again, when people are willing to give it away for next to nothing, you're going to take it and you're going to give yourself that financial flexibility.
Robert Schiffman, who leads our credit research at Bloomberg Intelligence, thank you so much. Let's turn to SpaceX, whose shares are extending gains for their second day of trading following the company's blockbuster public markets debut Friday. The trading offers this other glimpse into investor demand for what was one of the world's most private companies, and then they did the biggest IPO in history. There are some mechanics to what's happening in the market next. Joining us is Stephanie Aliaga, JPMorgan Asset Management Global Market Strategist. The big anxiety in the days leading up to the IPO was this great rebalancing of the passive funds because NASDAQ, Russell indices fast-tracked SpaceX's inclusion. It's day 2. Shares are still higher. But how much does the market need time to digest before it has to undertake that rebalancing?
It's a great question, and that's exactly the point. This issue of all of this issuance hitting the market doesn't happen all at once. Relative to the size of how much supply of SpaceX there will be in the market right now, we're just looking at a small fraction of it, right? 4.5% was that first day's volume, and that's going to ramp up over time. We think that 6-month mark is really going to be the point where you might see more volatility just given a greater supply in the markets, and then that increasing over time gradually over the course of the year, particularly given the S&P taking a more temperate pace there. But given that longer term horizon, I mean, that's key here. This is a market where we are looking at a large bump in terms of IPO issuance this year. This year projected around $260 billion. But for a market the size of $65 trillion, that is less than 1% of the overall market cap of the market, a market that is also 55% greater than it was in 2021. So we think so long as the market continues to chug along here with robust fundamentals, we just had a really solid earnings season. This AI CapEx boom continues to funnel earnings growth and revenue growth across the market, and households remain pretty strong buyers. Retail activity is strong. We think that this is a market that can digest this increase in issuance, and it's issuance that we have really been strapped for a number of years.
I want to go back to something we showed on the screen a minute ago, and it's basically more of an FYI that in the end, they sold more than the 555.6 million shares and raised more than $75 billion, right? This is basically an instant exercising of the green shoe, 83.3 million shares, raising proceeds of 85.7 billion. This has been a story that started about a race to IPO, SpaceX and now likely Anthropic and OpenAI, and it quickly changed to a story about race to capital. Alphabet came in, massive equity offering, Nvidia tapping the corporate bond market. Do you see a race to capital?
I think the economics around the AI boom continue to mount. Now, obviously, these companies are all in different pieces of this value chain and are raising capital for a variety of different reasons. But it is something that investors are going to have to get used to, I think. We, as great as the balance sheets of some of these companies are, this AI wave is just getting to be that much more expensive. And all of the revenues around AI will eventually come, but this is going to be a multi-year phenomenon, and right now we are ramping up to spend significantly more around AI infrastructure and all of these different pieces of the value chain. I think that points to the need for selectivity. Not all that glitters is gold. These companies do vary in their financials. We think at large, the fundamentals of this market and of the companies, spending the most and raising issuance in various markets is still robust. But you want to make sure in your portfolios that you have some proper diversification, just given that, the leverage and the economics around this AI wave are definitely beginning to diverge.
Stephanie, we've just got 30 seconds, but how closely are you tracking private markets? Because there are competing stories, right? There is also the staying private for longer because you can. Like, how much do you track that?
Yeah, well, we think that theme is still very much alive and well. I mean, you are going to get likely some big high-profile AI names, but the IPO markets are still going to be very selective. And a lot of the companies building in this AI race, whether it is robotics or even semis, but also particularly the application layer and building AI for healthcare, AI for logistics, all of those companies are in private markets right now. And of course, not all that glitters is gold. Right. I mean, market returns there can be quite volatile too. But when these companies eventually reach public markets, a lot of that growth has already happened. And that is a reason for investors to make sure they're looking beyond just public markets in their portfolios.
Stephanie Aliaga of JPMorgan Asset Management, thank you very much. A quick update on the Anthropic story. A US official has just confirmed that Anthropic executives will be meeting at the Commerce Department today. We'll follow the story as it develops and bring you the latest. Now, coming up, Fox has agreed to buy device and streaming company Roku in a deal that would create a new TV juggernaut. We've got those details next. This is Bloomberg Tech. Fox has agreed to buy Roku in a deal that values the streamer at $22 billion, including debt. The tie-up will create the third largest player in the US television market by viewership. Bloomberg Deals' Michelle Davis joins us with the deets. Interesting one. I got a Roku TV somewhere in my house. What's this about? What's the strategic play from Fox?
Yeah, this is a really interesting deal because Roku is seen as kind of the last big aggregator out there that everyone was wondering when it would get taken over. The founder for years has controlled the company, and there was always a question as to, does it make more sense to aggregate content and be the platform on top of which, content streams, or does it make sense to be a really big streamer that generates most of its revenue that way? And by buying Roku, Fox is basically saying, we want to make sure we are that neutral third-party platform.
Right.
Roku makes most of its money on advertising, which is an area that Fox had kind of fallen behind its competitors on in this, new streaming central environment. And so that's a lot of what the value is going to be coming from here for them.
21st Century Fox down significantly. Take me into the terms, like where we're at in the process.
So the deal, it's a cash and stock deal. The shares are down on the news, of course, because, investors don't always love to see a stock deal. At this point, the deal values Roku at about $22 billion enterprise value, so that's including debt. Of course, if Fox shares continue to decline up until the deal closes, that will mean that some of the overall value for the deal will be a little bit lower than $22 billion. But this really caps off a multi-month process where Roku had been exploring strategic alternatives. The founder, Anthony Wood, as we were just talking about, had been thinking about, what's next, succession planning. And Roku and Fox actually have a long history. Fox had invested in Roku years ago before the IPO. They sold out of their stake at the time that they bought Tubi. But by buying Roku, they're kind of, the two companies are coming back together. The founder will have a role on the board of the combined company.
Bloomberg's Michelle Davis, thank you very much. In other M&A news, Salesforce has agreed to buy AI firm Fin for $3.6 billion. Fin's customer service tools will complement Salesforce's agentic capabilities, according to the company. AI is a key part of the software maker's growth strategy as it works to boost investor confidence. Salesforce shares up a percentage point, right? And M&A has been at the heart of the Salesforce story for a little while now. We'll keep tracking it. Coming up, Citi's head of Pan-Asia Internet Research, Alicia Yap, join us to break down where China's tech market stands in a big global race. It is halftime, people. We'll be right back. This is Bloomberg Tech. Welcome back to Bloomberg Tech. This is what the technology sector looks like. There is a big focus on the outcome of what's happening between the United States and Iran and some sort of deal. We're going to get the details on that in just a moment. SpaceX is trading for just the second day as a public company, up 8%, $173.55 a share, and rising. We'll keep tracking that story. There's a lot of factors going into the biggest IPO in history. Let's get out to Geneva. Global leaders are arriving in France for the G7 summit, and this time the usual geopolitical guest list has tech additions. The chief executives of major AI companies, OpenAI, Anthropic, Google, are all slated to attend. The gathering comes just days after an unprecedented White House order forced Anthropic to block foreign access to its most advanced AI platforms. But first on the agenda, the US and Iran. The two countries reached an interim deal to reopen the Strait of Hormuz. Bloomberg's Tyler Kendall joins us now live from Geneva. Tyler.
Hey, Ed. Well, at this point, we're waiting for some firmer details from either side about what is in this potential memorandum of understanding, though we did hear from the Vice President, J.D. Vance, earlier today, who said that they are going to try to get that text out before this potential signing ceremony happening here in Switzerland on Friday. So far, we know that the main pillars of the deal are what we've been tracking for weeks, which, of course, includes reopening the Strait of Hormuz. But there is still some big questions here about how Iran feels its role is going to be connected to this going forward after Iranian state media earlier today seemed to indicate that Iran wants to continue to impose fees and have some sort of grip over the strait even after a deal is signed. We also have questions about what economic relief will look like and ultimately what sort of curbs Iran will agree to in this deal, though it is our understanding that this is going to be a phased agreement where those negotiations come later. And while the conflict in Iran is dominating the conversation already here at the G7, as you mentioned, President Trump has some really important meetings scheduled for later in the week on Wednesday, where we will see this face-to-face meeting with G7 leaders and these big tech CEOs. And that meeting is going to be just as much about the potential opportunities around AI as well as those potential risks, because Ed, Bloomberg News has now confirmed that senior staffers for Anthropic are meeting in Washington today with members of the Commerce Department after this unprecedented move by the administration to threaten that export ban.
Bloomberg's Tyler Kendall in Geneva. Thank you very much. There's also a massive wave of news across China's tech landscape today. Social media powerhouse Zhao Hongshu is reportedly gearing up for a blockbuster Hong Kong IPO this month, while shares of AI model maker GPU skyrocketed following a major price target hike from JPMorgan. But despite all this heavy corporate activity, Citigroup warns that global investors are still treating China tech as, quote, a source of funds, with Wall Street dumping local stocks to fund the global AI hardware trade. Joining us now is Alicia Yap, head of Pan-Asia Internet Research at Citigroup. And let's start with that thesis. I find it so interesting. There's a big distinction between news flow and activity, China's tech sector, and deployment of capital or finding capital to deploy elsewhere. Explain what you're arguing.
Yeah, so I think the reason why we mention it is because I think the investor interest, especially for those from the U.S. And Europe, so outside of Asia, and even for those that we speak to in Asia, they're based in Asia. People have interest, but then somehow we know that they've been underway, China Internet specifically. Or even to many that investors that share with us, they're actually using internet as a source of fund, obviously to fund their hardware trade in Korea, in Taiwan, and Japan. Partly because I think despite internet, for example, Alibaba, Baidu, they have full stack of AI. But then because of their core business are not really doing as well, they've been investing aggressively on food delivery, for example. They've been dragging the profit. So a lot of investors give us the feedback is that why should I bother so much of that while I have to deal with the core business? It is not a pure play, and I must well just play directly into some of the hardware name. So that's why this has been happening, and we've seen the last few months, China internet sector has not been performing, despite the valuation is actually getting quite attractive.
Right, Alicia, the story of the first half of this year was Chinese internet giants and frontier labs moving very quickly to try to close the gap with American technology companies. Does your research show that gap is closing?
Yes, I think indeed, especially, for example, take, Alibaba Cohere model, since 3.5 and then 3.6, 3.7 now, we're actually seeing there's a huge step up in terms of the model intelligence. And then same thing for, the independent lab, for example, Minimax that we cover. And also I think Tencent, the latest model, Hunyuan 3 that they released at the end of April, this is also increasingly closing the gap with the frontier model.
The story and the data that we track in the US is capital expenditures on the hyperscaler side, and then how real is the agentic AI deployment on the enterprise side. Mm-hmm. Take that story to China. How is that playing out in that market?
So I think from the CapEx point of view, I think many of us are aware that I think China side is not spending as high as what the U.S. Hyperscaler is indicating. Partly, I think there's a lot of cost components is cheaper, right, in China. Partly, I think there's also some of the existing capacities that is already built up last few years is actually able to support it. And then in terms of the agentic, right, the future agentic workflow, we think that Alibaba is trying in terms of the Cohere versus their existing application, for example, the Taobao, the AMAP. But then I think over time, we do hope that Tencent, at the end of the day, could actually come up with their AI agents inside WeChat, which they are obviously testing on it. And then with the next versions of the model, if it's intelligent enough, because I think they're going to train a lot of their proprietary data into the next versions of the model. And then hopefully that could actually ensure the AI agents also working within the WeChat ecosystem.
Another big story overnight from China was Ant Group basically planning to overhaul the Alipay super app, but to bring in an agentic AI user face. You brilliantly set out kind of what's happened 1H 2026. What does Citi think happens in China's tech sector in the second half of this year?
So we hope that, for example, company like Tencent or even, and to some extent, some of these super app, that if they're actually able to bring up the agentic workflow working within the super app, which allow a lot of the enterprise that have mini program, for example, they're able to use agents within their ecosystem, then most of these enterprise would be able to stay within their ecosystem in a way, then hopefully, things could take off, especially for the super app environment, that they can become the AI power ecosystem that we are looking for. And hopefully that could help to re-rate, the leader like Tencent or Alibaba, then in that sense to help the entire sector to get the fund flow rotation back. Yeah.
Alicia Yap, head of Pan-Asia Internet Research at Citigroup. Big focus on China tech right now. Appreciate it. Thank you. Now coming up, should we be sticking data centers in Earth orbit, or should they be under the ocean? We're going to speak with Mike Schroepfer, founding partner of Gigascale Capital. You might recognize the name, former Meta CTO. He has a thesis. This is what the NASDAQ 100 looks like. We're back nearer toward session highs and a gain of almost 3%. A lot of momentum. The index is near record highs. A big part of it is kind of feel good from the SpaceX IPO Friday, but also, of course, what was outlined by Tyler from Geneva about a US-Iran deal. This is Bloomberg Tech. Check back in on SpaceX. Shares higher, second day of trading after a blockbuster public debut Friday. That performance has helped boost confidence in a broader AI rally, and it marks the start of a shift from 2 decades of shares disappearing from public markets to this new era of stock abundance as the likes of OpenAI and Anthropic also prepare for IPOs and other companies sell new shares. Bloomberg's Carmen Reinicke has been all over it, and we expect in the next days, weeks and months a bit of volatility. Should we start with the here and now? I hope you had some of a weekend to digest what happened Friday. But right now, the net takeaway is what, Carmen, about this IPO?
The net takeaway is very positive. We see shares up a second day here. It was up about 8% the last time I looked at my terminal, extending gains from Friday's first day of trading. And this gives the company a valuation of about $2.2 trillion. So it's already launched itself into one of the top companies, one of the biggest companies in the stock market. So the takeaway was really positive. Investors bought into the IPO. There was solid trading. Nothing went horribly wrong. And that's kind of given investors the ability, one, just to be very enthusiastic about the AI trade that's supported by what happened over the weekend, a potential peace deal with Iran. And investors can hopefully start to shift their focus towards a Fed meeting on Wednesday.
Carmen, you and the team are out with the big take, and basically there's going to be a lot of new equity that hits the market, and it's going to change the story of the last 2 decades. Explain that to us. Give us the key numbers that we need to know.
Yeah, so this is a really huge deal. Basically, over the last few decades, there's been 12 trillion of equity taken out of the markets as companies buy back stock, which is a key way that they, one, spend money down on their balance sheet and return value to shareholders. It's been a major support of the stock market, and especially these big companies. So what's happening now? We see IPOs like SpaceX's record IPO on Friday, as well as equity issuances from companies like Alphabet, Meta, and Oracle, bringing equity back into the market, so growing the total number of shares that are available in a way that actually it can be dilutive for stockholders. So $1.5 trillion in shares coming back into the markets this year. That's according to a JPMorgan analysis. And really what the signal is these companies are saying, one, we can go to the equity markets. There's investor, desire, demand for our shares. And it's a good way to raise money to spend on what we need to do to build out more capacity, more data centers, to use AI in a way that will hopefully be accretive to earnings going forward.
Bloomberg's Carmen Reinicke, thank you very much. So one way that Musk aims to drive revenues and profit is to build out-of-orbit data centers, a complicated and expensive ambition that our next guest says may only be achievable by SpaceX. Instead, others should turn to submarine data centers to save on things like energy costs. Mike Schroepfer helped add tens of millions of square feet of cloud computing capacity as the former CTO at Meta. He's now the founding partner of Gigascale Capital, a venture firm making some early stage bets on those companies that are more focused on climate impact. But you put yourself in one bucket or another, I guess. Orbital data center or data centers where the ocean is the playground. Present your thesis to me.
Well, I don't think it's an either or. I think it's a little bit of all of the above. For space, it's very hard and expensive to get there, and I think nobody but SpaceX can do it with their vertical integration and launch costs at wholesale. Otherwise, economics are just tough. I can put a ton of mass in the ocean 100 times cheaper than I can put it in orbit. So I think you've got a lot of room to go in terms of using huge energy resources. We've got 10 terawatts of power in the Southern Ocean that's completely untapped, unused. We've also got, I built a lot on land, tens of millions of square feet. I don't think we're anywhere close to done using solar resources on land. Between solar and batteries, I could put together a new power plant in 12 to 24 months, in a pace that's faster than gas or launching into orbit. So I think there's a lot of different ways to do this. I think SpaceX is going to do space-based data centers. I'm bullish on land, solar plus batteries plus next generation, and in the ocean with companies like Panthalassa.
I think we therefore need to kind of understand the lasting and ripple effects of SpaceX's IPO, right? Which is, the prospectus could not be more clear. Here is the plan, orbital data center. But when you're in private markets putting bets on earlier stages, if someone comes to you with a deck and it says, I too have a plan for orbital data center, do you bother? Do you just say, well, SpaceX has got that covered? There isn't a need to fund this concept, this idea, this plan elsewhere?
I mean, I'm in the business of looking at everything. So I'll always take a meeting to understand, to see if I've missed something. And I'll update my priors if I see new information. Every time I've looked at the math, the economics on space-based data centers, it's doable. It's extraordinarily expensive because you have to pay for launch, you have to pay for radiation hardening, you have to pay for radiators large enough to get rid of the heat, because these servers, produce a lot of heat. And once you add up all those costs, I just don't see how it's cost competitive with current on land or current ocean. You'd have to assume a dramatic increase in the price of building stuff on land before you want to go into space. Again, unless you're SpaceX and you get all of those things at wholesale cost, in which case your costs are very different. So I'm not a wholly no, but I'm skeptical when people pitch me on these ideas.
Mike, if we measure the economics of, and we're just showing what SpaceX presented the other night, the design, the economics of the space-based data center is $1 per token basis. How does submarine data center compare on paper?
Well, again, I think you have to look at all the assumptions into that. And, when I've done the modeling and math, if you just sort of do some basics on this, it's about 100 times cheaper currently to put a ton of mass in the ocean than it is to put that same ton of mass in space. So I think you have a huge cost advantage. And when you look at the ocean, you have almost unlimited free cooling in cold seawater. In space, you can radiate heat, but that requires building radiators or radiating into a vacuum. It's expensive. So again, I don't see how the math closes for anyone but SpaceX, who again has everything at wholesale cost, already launching large volumes of Starlink satellites. So I think it's a great business for them. I'm just not clear on how anyone else can compete on costs.
So our starting assumption is right now the world is compute constrained, right? You were at Meta for a long time. Meta is going to be one of the big capital expenditure deployers. Do you see Meta being open to a world of submarine data center as a solution, or looking at orbital data center as an alternative?
I think all of these providers, will look at these technologies when you show tokens being generated. Once I'm at a terminal, I can say, here's a chat experience with a live webcam of a little buoy bobbing in the Southern Ocean, or a feed from the live satellite saying this is where the tokens are getting generated. I think everyone's going to perk up and add more attention. Until then, we're talking about theory because no one's done either of these things. But I think that at the end of the day, people want reliability, they want availability, and they want tokens now. So if you can provide people compute now, then they're open to it.
And a reminder to the audience that SpaceX said the earliest deployment of orbital data center is 2028. Mike Schroepfer, founding partner at Gigascale Capital, thank you so much. And as all eyes continue to be on SpaceX, we bring you some of the biggest investors in the company. Tomorrow, Cohere Capital partner Sean McGuire joins us, a conversation you don't want to miss. Now, coming up, we're going to discuss the newest update on the long-awaited AI capabilities of Apple's Siri. Power on. This is Bloomberg Tech. Apple's Siri AI is catching up to its chatbot competitors, pulling the tech company out of an AI slump. 2 years after making promises of AI functions, Siri's newest features center around its so-called personal context and on-screen awareness technology. Bloomberg's Mark Gurman got the access and joins us now. This is so interesting. So you've had time to use Apple's Siri AI in a way that you can explain where we're at with it. In Power On over the weekend, you detailed the most important parts. What's it been like?
Yeah, Siri AI, Apple's revamped Siri. You want to call it Siri 2.0, you can do that. Here's what I'll say. It fulfills the promise of Siri that the company made 15 years ago when it debuted the first version as part of the iPhone 4S in 2011. It's terrific. It's on par probably with recent versions of ChatGPT, Google Gemini, and Claude. It's not perfect. There's a lot it can't do. You can't do in-depth research like you can do on ChatGPT. You're not going to get major PDF summaries of very long documents. You're not going to get tax preparation. You're not going to get Excel and PowerPoint slide deck creation. But for 95% of people, they use ChatGPT and Gemini for web AI search, for historical information, for asking questions about anything. It could do all of that, plus actually do the things that Siri has been supposed to do, like correctly play your music or correctly navigate you places. This is a big win for Apple.
Just as people use ChatGPT for the most part right now, the title of the Power On, Apple's new Siri is just good enough to ease AI crisis. Have I put the emphasis in the right place? Quick.
It is just good enough because it's not exactly as good as the competition. But for 95% of people and to meet the needs of the majority of the Apple user base, 2 billion plus strong, it does that.
Bloomberg's Mark Gurman, a Power On every Sunday. You've got to read it, and then Mark will be on the show, give us the details that we need. Thank you very much. A quick check on shares of SpaceX. So the gains in the second day of trading now up to 10%, giving SpaceX, as it stands, a market cap of around $2.32 trillion. Just day two as a public company trading in the public markets. But we talked throughout the hour about the lasting effect this will have in not just the next few weeks, but the next few months and years. That does it for this edition of Bloomberg Tech. Those conversations really worth recapping. There's a lot happening in capital markets across public equity, across debt, and it's the biggest technology companies in the world that are dominating that news flow and that market move. Check out the podcast. You know where to find it on all the Bloomberg platforms, as well as on Apple, Spotify, and iHeart. From San Francisco, day one, this is Bloomberg Tech.